stocks are higher right now, and here to talk about market action is Jerry Brackman, Chief Investment Officer at First American Trust. Welcome, Jerry.
Thank you.
So it looks like investors are bracing for the results of the U.S. midterms. Are you anxious?
Yeah, I think everybody's a little bit anxious, especially since what we saw last time in the major election, the polls weren't really accurate, and I think that's why we see the market kind of dilly-dallying today, not really moving any direction because they're waiting for that uncertainty to get resolved.
So let me speculate. If Republicans lose the House but keep the Senate, how do you see this working for the economy and the markets?
Well, I think what's kind of baked in currently is that we'll have a split House. So Democrats will take the House and Republicans keep the Senate. If there's a different outcome than that, then the market's going to react. So that kind of baseline expectation is built into the market currently. Either way, I think we could see somewhat of a relief rally here just because we had a rough October, but also this uncertainty kind of goes away. And once we move past this, I think the focus will come back to what's really going on in the economy, where are interest rates going, and what's going on with this global economy that's really not doing as well as the U.S.
Any particular stocks you are looking at today?
Yeah, a stock we own, CVS, came out with earnings this morning. Definitely strong earnings. The stock is up. We like that stock because of the merger with Aetna and some of the synergies coming out of there. Obviously, no change or quagmire in Congress is going to help a stock that might be subject to potential legislation on drug pricing and so forth. So it's a kind of value name that will work better here as high beta and technology has really been getting challenged here over the last few weeks and a couple months.
And talking about sectors, any particular sectors like, for example, industrials?
No, we're not a huge fan of industrials right now, just because we still need to see the effect of all these tariffs coming through to see whose cost is going to get affected there. What we like more are things that are a little bit more value protected. As we've seen over the last couple of months, technology and other high beta sectors, such as consumer discretionary, Amazon in particular, kind of getting challenged on price and valuation. So we like sticking with sectors such as Staples, which I just kind of mentioned, CVS, Procter & Gamble's another name that we like there. More your steady eddies that, depending on what comes ahead here, will hold up its value a little bit better than some of these high flyers that we've seen really get challenged.
And if we forget the daily noise, what's driving the markets these days?
Well, I think there's a lot of question of what's going to lift the economy and the market higher as we're starting to see some challenges in the economy. And the question is, this political change, will that change anything? But really going forward, how do we continue to have this growth that we've had here in the second quarter and third quarter GDP? When we look through that, final sales are only up 1.7% in this last GDP print. So we see some underlying issues there. An auto market that has peaked, a housing market that's getting challenged. And some of those are getting challenged because we see the 10-year moving up, mortgage rates moving up, the cost of money is getting a little higher. So what's going to take us out of that slowdown and decelerating economy? What can kickstart that? And obviously, if Republicans keep both houses, I think that will be a benefit short term with maybe longer term pain to pay for some of those things, and vice versa if the Democrats have a surprise today, that we'll get maybe more pain up front and maybe a better longer term outlook.
And how do you advise your clients to play this environment?
Well, what we tell a lot of our clients is, you have to look at where you're positioned. This is not a one-day trade. Most of our investors are long-term investors. So you have to look at the margin, what are your trades that you're doing? Are you looking at trimming back some of your technology, getting a little bit more defensive in posture, especially some clients that have ridden things like Amazon or Google or Apple or Facebook up? those positions can get outsized. So we're telling people to really pay attention to their portfolio and make sure they don't just have all momentum high beta stocks in there, because that's really what's been hurting them in the short term. And we've been advising clients this all year. We've been short technology all year. And what we see, just like the market goes up on a steady pace and it comes crashing down at times, same thing with value versus growth. When value starts outperforming, it really makes up a lot of ground quickly. And so we are advising clients to continue to look at those value names. We think those are going to be better protected from a valuation standpoint and also a tougher economic environment. We do see things starting to slow. And unless we get something to kick it out of that, we have a global economy that's slowing, and all these things are headwinds for us here as well.
Thank you, Jerry.
You're welcome.
My guest was Jerry Brackman, Chief Investment Officer at First American Trust. I'm Alexandra Michalska, and this is Reuters.